The time is 2 p.m. You're watching Market View ERS Text Talk right here on Eswatini TV. My name is Nosile Tole. Glad to have you on the program today. Onto this, Eswatini has taken a bold step on the global stage, positioning itself as a leader in Africa's investment future. On the sidelines of the UN General Assembly taking place in New York, His Majesty the King announced a landmark investment of $5 million towards the Africa Strategic Investment Alliance. Above all, the ASIA is built on commitments to mobilize funding, advance inclusive growth, and drive sustainable development across the continent. But exactly how will this funding or contribution translate into real benefits for the nation's economy, the business fraternity, and Eswatini? Our in-house economist Anele Sibia will join me on the program to help us understand the impact of this contribution and Eswatini's role in continental partnerships. But first, as usual, our business news.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.sz. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Right now, in our business stories, we begin with this. The Public Service Pensions Fund, PSPF, has reported a net profit of 3 billion emalangeni for the financial year ending March 31st. The fund's net assets now stand at over 37 billion emalangeni. This was revealed by Nhlanhla Sibanze, Director of Finance at PSPF, during the Stakeholder Engagement Forum held at Hilton Garden Inn in Mbabane. Sibanze also stated that the fund is aiming to grow its assets to 50 billion emalangeni over the next 3 years.
Contributions for the year were 1.4 billion compared to 1.3 billion. There was a slight increase that relates to a cost of living adjustment each and every time the basic salaries are adjusted. So also there was a relief in terms of the hiring freeze that government actually imposed during the COVID period. So the next line is the investment income, which basically the interest received as well as dividends coming from the investments. So we are sitting at 2.7 billion compared to 1.9 billion. Administration expenses, which basically involve operating expenses like repairs and maintenance, consultants and other things, as you can see, stands at 119 million compared to 108 last year. So in net revenue, we're sitting at 3.7 billion compared to 2.8 billion. So in terms of the fair value adjustment, that's the increase in market values of stocks overseas and also in South Africa. We came out with 884 million compared to 1.5 billion last year. We're sitting at 37.5 billion. Emalangeni, that's the net asset value for the fund, which is made out of the domestic investments. We're speaking about investments within Eswatini. We invested like 17.1 billion as at 31st March 2025. And foreign investments, that's South Africa and offshore, that's 20 billion emalangeni. So the increase in the net asset value from 34.5 to 37.5 was the net surplus of 3 billion. Looking at the actuarial valuation, that's just the comparison between the pension liability and the plan assets. In terms of the plan assets, we've already spoken about them. That's 37.5 billion compared to the projected liability, considering if the fund would shut down today and a need arises whereby we need to pay all the civil servants, their past service costs and other items. The discounted liability from now to 60 years, it stands at 42.7 billion. So that's where the famous deficit comes from. It's not the deficit coming from operations, as it were, or the net profit losses the fund is making. We haven't made any operating losses. It's just a projection to say that if the fund would close today, how much money would be paid to civil servants. That amount of money that we're owing as we speak now is 42.7 billion. Compared to the assets that we have, that means all the investments and also all the investments within Eswatini, which is 37.5 billion. So the deficit comes from the difference, which is actually 5.1 billion. If anything would actually affect the contributions that come to PSPF, that amount of money, which is 5.1 billion deficit, will worsen. So the funding level, as we speak now, it sits at 88%, which is basically the value of the plan assets compared to the pension liability of 42 billion. So basically, if we continue to implement the strategies that we've been doing as a fund to make sure that we grow the level of assets, we want to achieve 100% level, but with the threat that is in the economy due to the ENPF conversion, whereby the contributions will be taken, that gap will widen over time.
The Public Service Pensions Fund, PSPF, has raised concerns that if the Eswatini National Provident Fund is converted into a national pension fund and civil servants' contributions are split between the ENPF and PSPF, contributions to the PSPF could be reduced by up to 10% because of basic salary. This was revealed by the Chief Executive Officer, Masocha Vilagati, during a stakeholder engagement forum held at the Hilton Garden in Mbabane.
The Chief Executive Officer explains that splitting contributions between the PSPF and the ENPF would result in reduced contributions to the Public Service Pensions Fund. He emphasized that while the conversion is a good initiative, it should not be implemented in a way that disrupts members' contributions.
The other scheme has more than 140, 150,000 members. So effectively, they are a larger portion of the working class. They form a big portion. Civil servants are only about 20% or so of the working population.
The Minister for Public Service, Honorable Mabulala Masego, stated that he will hear from public sector unions to determine how best to approach the matter. He noted that the ministry supports the conversion provided it does not lead to the dysfunctionality of the Public Service Pensions Fund.
Dindzaba ke letitsinza i-conversion ye-ENPF. Dindzaba letilungele nini? Ngicabanga ukuthi ndatikhulumisa de. Mina ngiyindvuna ngingumfana ngisho njalo. Ukuthunywa ngini. Ukuthi nithini angeke nje ngitisukele ngitikhulumele kepha ngingakathunywa ngini. So siyathemba ukuthi ke kulomhlangano lo nitawukhuluma kahle bekunene livunulise nelive because le National Pension Fund vele iyafunakala lokho ibe khona. Na utawubuka nje ukuthi kunemaswati la khona lamanye nje asebentala kubo mafemini kude la nakho. Nasaphuma kaphathi lutho.
Jethro Ndlangamandla, Director of Operations, echoed these concerns, highlighting the need to safeguard the integrity of contributions to the PSPF.
I-conversion yaka NPF sesidume ngakuthi thina asifuni ukuthi yendeke. Kude umuntu ongafuni ku-NPF ukuthi yendeke. Sithi umuntu akaconverte akahlabe imbuti yakhe. Sisakahlabe imbuti yakhe. Since i-conversion ayendeke, it is good for the people labete i-pension. Uma bese usawushiya laba bakho so elsewhere kuse conversion safanele igama elinye nyalo.
Public sector unions indicated that they are open to supporting the conversion of the ENPF into a national pension scheme as long as members' contributions remain unaffected. Reporting, Nelson Dlangamandla for Minkosinzi Nisa Mbabane.
Right, those were just some of our business stories this afternoon. We'll have a break. After that, we're in conversation with in-house economist Anele Sibia. Stay tuned.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back to the program. Onto this now. On the sidelines of the ongoing UN General Assembly in New York, His Majesty King Mswati III announced a funding of $5 million, which is equivalent to 86 million emalangeni, towards the Africa Strategic Investment Alliance, the ASIA. The alliance aims to mobilize transformational funding, strengthen partnerships across the continent, and drive Africa's economic growth, of course. But what is the anticipated impact of this contribution on Eswatini? Economist Anele Sibia joins me now virtually to share insight into how such moves position the country. A very good afternoon to you, Sibia, and thank you so much for your time. This catalytic funding, they call it. Just your thoughts. How does it position us as a country? What does it say or signal, rather, about our economic priorities?
Thank you, Notsile. Good afternoon to you, and also a good afternoon to the viewer. I must say that this is one of many that we've seen the kingdom leading in terms of, cementing Africa's role in the global development and actually in the global south. I mean, if you recall back, I think 5 to 8 years ago, we saw Eswatini, pledging around the same amount to the Global Fund, and that was by far one of the biggest that African countries actually could pledge into that fund. And what we saw coming after that was, Eswatini just ramped up, and we reached 95 in terms of HIV. So what that signals to me is the fact that, the causes that His Majesty puts his full weight behind, such that even in the global landscape, in the global theater, in the global political theater, you see him there playing, ensuring that, Africa takes part of the brunt in terms of solving Africa's problems instead of waiting for development finance to come from abroad. So I would then say that Eswatini continues to be that global leader, which champions, co-funding from the global south in terms of our global development. And I think this leading role and this catalytic fund or this seed fund that we've put into that Asia partnership has actually cemented that role. And you would then expect that also we should see more or less the same movements in the domestic economy when upon His Majesty's return. We should see, a bit of a shift and a push towards that microfinance landscape and that financing for SMMEs and that financing for our youth businesses. So for me, it's both the global political theater, while also we should expect to see some changes in the domestic configuration of things.
In accordance with Asia's structure, their mandate is also to support small businesses, youth and women in the kingdom, and of course in the continent. But given these objectives, rather, how do you think this funding can then be translated into tangible economic benefits for the local people?
So what we are looking at here, Notsile, is, specific focus to underserved populations. And I mean, if you look at the fact that overall in Africa, we have around a $330 billion gap, financing gap. And mostly when we lack that access to finance, it's usually the youth and women, and our SMMEs seem not to somehow tally to the global banking infrastructure, which would then allow that access to finance. So what we are seeing through this Asia partnership and conglomerate is a shift towards bridging that gap. So what we are going to see happening right now is financiers across Africa coming to think around how can we fund an African program within an African banking infrastructure, right? And what you need to bridge that gap is such partnerships where we have money that's not going to, follow the same guidelines as the money that would have been raised through shareholders and capital markets. And thereby we will be bridging that financing gap for our SMMEs, and most particularly women and the youth, who in most cases would lack the right, collateral and the right documentation to access finance, as it were. And you would see that this partnership is structured in a way where you have both private sector and the governments coming together to come and build a new infrastructure, a new financing modality for African businesses. So what we are then going to see, Notsile, is we should see a lot of women and children and youth coming into play in the business landscape, and also getting the finance they need to grow their businesses to a level that is going to be sustainable and pull quite a number of Africans out of poverty. And what we note with this, the targeting of this partnership is it targets those, demographics that would make a bulk of Africa's demographics. Africa is poised to reap what we call the demographic dividend. If you look at the population structure of the entire continent, it is largely a youth population. And we know that overall, when you look at the gender distribution, women would always make up, say, around over 50% of the population. So targeting those demographics, Notsile, is actually targeting the future growth for the continent. And also we expect those to trickle into the region now that into the domestic economy, now that His Majesty has taken the lead on that global on that global stage.
Speaking of partnerships, Sibiya, how do you think Eswatini's active participation in this alliance, can enhance, well, also considering that we do have economic ties with other countries in the continent, enhance or rather see the country leveraging our position when it comes to the much talked about AfCFTA?
So what I envisage from this partnership, Notsile, is number one, we should see a lot of global south to south learning, where we take best practices from across the continent, both within private sector and also the public sector and quasi-public companies, and then we somehow reshape that and see what can work best for Eswatini in terms of bridging the finance gap. And then in terms of moving in concert towards leveraging and taking advantage of the AfCFTA, one of the things that are critical for Africa to be in a position to take advantage of the AfCFTA is actually access to financing. And as we've already stated, there is around a $330 billion gap in terms of financing for African projects, across the entire continent. So what you need for us to be able to trade is you need that catalyst to come into play. And this partnership will not only just catalyze access to finance, Notsile. One thing we know financiers are being quite strong in doing is that ability to form those linkages, between companies in the different countries where they have a footprint, and see what can be replicated in another country. So this will also close the technological gap within Africa, because what we're seeing right now for the first time is more of an insular look into financing problems within Africa. So that means now we are going to take a closer look and zoom in on the issues of access to finance and the technology that is required to ensure that we can give finance to a lot of African SMMEs and the youth and women in particular. So this partnership will catalyze and can also leverage from the AFCTA.
Finally, every year we do see His Majesty travel, and we does go abroad. He makes certain commitments that then will have a positive impact in the countries such as these. Do you think this is one of those that then could reshape our long-term development trajectory, especially when it comes to attracting international investment?
Thank you, Notsile. So what I'm looking at the very first, we should expect as soon as His Majesty lands, we should actually see domestic financiers moving in concert and taking leave from what His Majesty has already done. And we should already begin to see that bolstered finance towards SMMEs, the youth, and women in particular, because His Majesty has already given cue in the global theater. And then also in terms of this development financing, what this also speaks to us, to the world, is Eswatini's commitment to sustainable development. Because if you look at the Asia Partnership, it also focuses on, the green revolution in terms of those green investments, and that actually aligns with our plan of action in the kingdom, and that actually has its own type of investor. So we should see those investors coming into Eswatini, because this is a very strong signal that says Eswatini is transforming and Eswatini wants to go green. So if you want to go green, it is actually going to be the best place for you to come and invest in Eswatini.
Sibiya, we just can never thank you enough for your insight, but we still have you with us. We'll have a look now for our market analysis. Right, we have about 7 minutes before we can call it a day here at the show. So, Sibiya, now for our market analysis segment, we are seeing that equities are experiencing some tech-driven volatility and U.S. bond yields are rising. How should investors be interpreting these developments?
Thank you once again, Notsile. So what we're seeing right now is a market that has taken a stand and is asking whether these AI investments are actually going to pay off, right? I mean, remember, just a few days ago, we saw NVIDIA propping up OpenAI with $100 billion investment there to ensure that when the chip maker makes the chips, there is going to be demand for it, and that demand is going to actually continue to sustain this. But what we're seeing right now is markets are asking, when are we going to start seeing the profits? That's what markets want. They want profits, not continued investments in something that is not yet going to be profitable. And that's why we're seeing the Dow Jones Industrial Average, the Nasdaq, and the S&P 500, they're all down, with the Dow Jones Industrial Average being the biggest loser. They're losing around 171 points in yesterday's trade, and the Nasdaq Composite Index losing around 75 points in yesterday's trade. So now, what markets are looking for, Notsile, is how do we monetize this artificial intelligence race? How do we make money out of AI, and how do we turn that into a profit? And it also brings to mind an issue of Notsile, of the investments, the energy that is required to run. For example, if you look at that NVIDIA investment, 100 billion investment, and when you look at the energy requirements there, we are talking around, I think around 10 kilowatts of investments that are needed just to run that investment, and that's just energy that is not there yet. So I think that is what has thrown a spanner into the works, with markets stopping to think whether it's even feasible and if it is even going to make money. And also when you look at the place there where we saw the likes of Intel, coming out to say that no, they are getting around a 5 billion investment from from NVIDIA, and then the following day they're waking up asking for another 5 billion from Apple. Now markets are asking, when do we stop pumping in money and start getting those returns? So that's what we're seeing in the US markets. And when you go to the European markets again, remember when President Trump was in the UK the past 2 weeks during that pomp and pageantry there, there was that 150 billion tech investment promised by those US firms into the UK, and that was going to trickle overall into Europe. But right now, when the markets are stopping and they're pausing and they're asking questions around the profitability of AI, and now that calls into question whether those investments are actually going to build markets in the direction that would want markets to go, and if we are going to continuously have to pump in money without actually turning a profit. And then there's also the issue of inflation fears overall within London, and then when you go into Germany and France there overall, what we're seeing also coming into play there over and above the AI story is the fact that when you look at President Trump's tone, at that UNGA assemble there, he says, Ukraine can win with with Europe's support. So he seems to be distancing the US from that solution within Ukraine, and now that has actually sent a bit of some fear into Europe overall. And then again, the AI stories continues and trickles through to Asia. What we're seeing there is, Japan, the Nikkei, only just staying on the positive there, but we do know that a larger proportion of that is being driven by the fact that we're seeing a continued upward tick in the interest rate within the Tokyo stock within Tokyo. The Bank of Japan is continuing to manage, the economy very well right now. But when you come into China and the mainland, you do know that there is the issue with that TikTok story. There is an issue with the sale of chips between NVIDIA and Chinese companies. And right now with AI showing these signs of slowdown and this sell-off in the US, that would definitely trickle into the Chinese economy and basically into Hong Kong, when we know that Hong Kong is being led largely by those tech stocks there. When you come into South Africa, we're seeing again a bit of some losses there, in response to those tech issues, because what this also signals is an issue around the global demand, not really where the demand is going to go, and we did expect a huge chunk of this year's growth to be driven by those AI stocks. In Eswatini, we've seen a bit of movement, including the likes of Nedbank and SBC, and that has actually pushed the Ultra Index in the Eswatini Stock Exchange to 484.25, up some 0.17 percentage points. Gold has actually reached a new time high, given all these AI craze and that sell-off in AI, and we're seeing a bit of hedging in the markets, and we are questioning whether the bull run has actually come to an end, but we should hope to see tomorrow's numbers turn better in the overall stock markets. Brent crude has somehow also lost a bit of ground because of demand fears in the global economy. The Lilangeni remains relatively strong across the dollar, the euro, and also against the Japanese yen. Now that's purely because when gold goes up, our gold-linked economy, the South African economy is a metal-based economy, and then we tend to see the Lilangeni appreciate as well. Thank you, Notsil.
Sanele, thank you very much. Thank you for your insights and your time this afternoon. That was in-house economist Sanele Sibia helping us make sense of what's moving markets this afternoon. Until the next edition of Market View ERS Tech Talk, thank you for staying with us. Take care.